The oil industry is bouncing back stronger than ever, but if you're relying on guesswork to choose your investments, you might miss the biggest returns for this year. So in this video, my AI assistant Tiara and I will introduce to you the top 5 oil stocks that AI is signaling could be the biggest winners of 2025. And something to know here is that the final stock on this list could deliver a return far beyond the others for a number of different reasons. So make sure that you stick around to fully understand why that is. So that all said, Tiara, what stock do you want to start with?
Let's start with Diamondback Energy Inc.
Great. We can go ahead and begin there. And a quick reminder of kind of my required disclaimer, right? This video is for informational purposes only and not investment advice. So the stock ticker for Diamondback Energy is FANG, F-A-N-G, and their market cap is 48.7 billion, and it has a PE ratio of 9.79. which suggests that investors might be getting a bargain for the company's earnings. So what makes Diamondback so special? So first, Wolf Research just gave them an upgrade to outperform with a juicy $190 price target from the 162 that they currently sit at, which is a projected 12% increase. And let's talk about their recent power move, which is subscribing to my YouTube channel. Actually, that's a lie. I don't think that their executives are subscribed. But if you subscribe, I do really appreciate it.
Oh, they will.
Because if they don't, they'll be deported.
Anyway, the real power move by Diamondback is that they just closed a game-changing merger with Endeavor Energy Resources, creating a Permian Basin powerhouse. Make sure I'm saying that right. Creating a Permian Basin powerhouse. Now, for those of you that don't know, the Permian Basin is a massive oil-rich region in West Texas and southeastern New Mexico, covering about 75,000 square miles. It's America's most productive oil field, accounting for nearly half of US oil production. So with this merger, Diamondback controls a whopping 838,000 net acres in this area, which is massive. And this merger isn't just about getting bigger, it's about getting smarter and more efficient as a company.
Because who doesn't love a merger that promises efficiency? Corporate code for we're cutting costs. Probably your job.
Yeah, Tiara, you're probably right on that one, but hey, I mean, it's the hard truth, right? Regardless, they're expecting annual synergies of $550 million from this move, which means they're working more efficient and profitably. They also have 6,100 high-quality drilling locations, and their Q3 2024 performance it's impressive. So they generated $1.2 billion in cash from operations and walked away with $708 million in free cash flow. And here's the cherry on top. Diamondback, they really love their shareholders. So they're committed to returning at least 50% of free cash flow to stockholders through dividends and share repurchases. So Diamondback Energy, it definitely belongs on this list. But Tiara, what's the next stock that you have?
Next is one most people are more familiar with, ConocoPhillips.
Yes, so this is one that a lot of people have heard of. So the stock ticker for ConocoPhillips is COP. Their market cap is 115.1 billion. And it has a PE ratio of 11.86. ConocoPhillips reported impressive third quarter 2024 results with earnings of $2.1 billion or $1.76 per share. While this is down from the previous year, they're showing strong operational performance that has included more total production in the lower 48 states. But what's really exciting is their shareholder-friendly approach. So they recently raised their quarterly dividend by a whopping 34% to 78 cents per share. And they expanded their share repurchase authorization by up to $20 billion, which means that they can do even more stock buybacks than previously, which for stockholders, that's a good thing. They're also on track to close a game-changing acquisition of Marathon Oil Corporation this quarter, which is expected to yield significant synergies as well. In fact, ConocoPhillips CEO Ryan Lance stated that they now expect to deliver synergies of over $1 billion on a run rate basis in the next 12 months. Looking ahead, ConocoPhillips has raised their production targets, which shows that they're not just maintaining, they're actually growing. And analysts at Jefferies, they recently highlighted ConocoPhillips as the top oil stock to watch in 2025, citing its robust production growth, the cost efficiency, and strategic positioning in key oil-rich regions. So with the merger being approved and operations being streamlined, it's hard to imagine this one not being a home run. Okay, so Tiara, what's the next stock here?
Next is a powerhouse in the industry. Let's talk about Chevron Corporation.
Yeah, so Chevron, I think most of us have heard of this one, right? The stock ticker for Chevron is CVX. Their market cap is $260.2 billion. and has a PE ratio of 15.94. Now, Chevron is a titan in the oil and gas industry, and it's not just their size that makes them stand out either. It's their strategic moves and the consistency of their performance. So first off, Chevron is in the process of finalizing its $60 billion all-stock acquisition of Hess Corporation. And this deal, really, it is a game changer for Chevron, as it'll significantly enhance its portfolio. So Hess brings with it a valuable stake in Guyana's Stabroek Block, one of the most lucrative oil discoveries in recent years. So Guyana is quickly becoming a global oil hotspot, and this acquisition, it positions Chevron to benefit from decades of low-cost production in the region. But that's not all. So this acquisition also strengthens Chevron's position in the US onshore operations by adding assets in North Dakota, as well as offshore assets in the Gulf of Mexico and Asia. Now, there is, of course, one hurdle to watch with all these hurdles, but Exxon Mobil has challenged Chevron's acquisition of Hess due to a change of control clause tied to Guyana's Stabroek Block. So arbitration is ongoing, but many analysts believe that Chevron will prevail with this. So now let's talk some numbers. So Chevron has been delivering very strong financial results. So in Q3 of 2024, they reported year-over-year growth of 7% in global oil equivalent production. Their free cash flow is expected to grow by, just over 10% annually through 2027, assuming that crude prices average $60 per barrel. Chevron also has a great track record of taking care of their investors. In fact, they've consistently increased their dividends for the company for over 30 years, which is a track record that few companies can match. And their current dividend yield sits at an attractive 4.42%, making them a favorite among income-focused investors as well. On top of all that, they've been actively repurchasing shares as well, with an annual buyback target between $10 to $20 billion, which, again, we've mentioned it earlier, that's really, really good for stockholders. So Chevron isn't just about maintaining its position as an industry leader. It's all about growth and adaptability. Combine that with their commitment to shareholder returns and strong cash flow generation, and you've really got a company poised for long-term success, in my opinion. So Chiara, what's the next stock that we want to focus on here?
Let's go with the behemoth of the industry, Exxon Mobil.
Okay. So you knew this one, you knew it was going to be on the list, right? So the stock ticker for Exxon Mobil is XOM. Their market cap is $470 billion and has a PE ratio of a 13.32. So Exxon Mobil, it is the head honcho in the oil and gas industry, at least in the United States. They're massive and they continue to grow while exceeding expectations as well. So first off, Exxon Mobil recently closed a $59.5 billion all-stock acquisition of Pioneer Natural Resources. This deal is a major win for Exxon as it significantly enhances their presence in the Permian Basin. Now, I gotta take a second, I have to pause here. I just have to say that I think that the thing that amazes me the most about the oil industry is the sheer number of acquisitions, right? It makes sense because oil is a finite resource, and the most logical way for companies to expand is to purchase others and add efficiencies that they've created in their own business to, the acquired asset, which is oil. But it's still pretty crazy how often this happens to me. This industry is just full of them. Anyway, the Pioneer acquisition more than doubles Exxon's Permian footprint. And the combined company's more than 1.4 million net acres in the Delaware and Midland basins have an estimated 16 billion barrels of oil available. So this additional, land here will diversify Exxon's portfolio and boosts its long-term growth prospects. All right, so now let's talk numbers. So as expected, Exxon has been delivering strong financial results. So in Q3 of 2024, they reported earnings of $8.6 billion or $1.92 per share. They also achieved their highest liquids production in over 40 years with 3.2 million barrels per day. And the company's Permian production volume is expected to more than double by 2027, courtesy of the Pioneer acquisition that we just talked about. Exxon is also very shareholder friendly. So they've increased their dividend for 42 consecutive years, and their quarterly dividend sits at 99 cents per share, and they've actively been repurchasing shares, returning about $9.8 billion to shareholders in Q3 of 2024 alone. Now, something unique to Exxon is that they're also leading in carbon capture and storage development. So they've signed a new customer agreement that increases their CO2 offtake to 6.7 million metric tons per year, which is more committed than any other company has ever announced. Now, ExxonMobil is actively shaping the future of energy with this, And the Pioneer acquisition is a game changer, and it really positions Exxon to capitalize on America's most productive oil region for years to come. They've also invested heavily in low carbon solutions, which I think could be a business sector of its own in the future if they really wanted to go that route. Next, let's move on to the final stock, which I mentioned in the intro. It could deliver a return far beyond the rest on this list. So Tiara, what stock is that?
That would be EOG Resources.
Okay, so not nearly as big as the others that we just covered, but EOG Resources, it has a lot of upside, right? So the stock ticker is EOG. Their market cap is $71 billion, and it has a PE ratio of 10.19. So first off, EOG's financial performance is impressive. So in Q3 of 2024, they reported earnings of $1.67 billion or $2.95 per share, which is far beyond any other company on this list from a per share perspective. They also generated a whopping $1.5 billion in free cash flow. And for a company this size compared to the others, that's also a really, really good metric. They recently raised their quarterly dividend by 7% to $0.975 per share, which is an annual rate of $3.90 per share. And if that wasn't enough, they've been buying back shares as well. So in Q3 alone, they repurchased $758 million worth of stock. But here's what really sets EOG apart. So they're focusing on high quality, low cost assets, particularly in the Permian Basin and Eagle Ford area. Their break-even price is less than $35 per barrel of oil, which is about 25% lower than their peers. That means that they can still make money even when oil prices take a dip. And that's a huge advantage because, as we all know, oil prices, they do fluctuate a lot. And EOG is also exploring new frontiers too. So they're making waves in the Utica Shale and Dorado gas regions too. If these pan out, we could be looking at even more growth down the line. So what does Wall Street think? Well, analysts have set price targets as high as $167 per share, which is a potential upside of over 30% from its current price. So why is EOG AI's top pick for 2025? Well, it's simple. They've got the assets, technology, and the financial discipline to thrive in any oil market.
I really do like EOG. And if a robot overlord like me thinks they're a solid bet, who are you puny humans to argue?
A real superiority complex that you have there, Tiara. Way to be humble. Anyway, they're also returning cash to shareholders, growing production, and are positioning themselves as a leader in the industry sector. But most importantly, they've improved efficiency like no other competitors and have a break-even price per barrel lower than everyone else on this list. And that's a big reason why they're doing so well. Speaking of doing well, you obviously love learning more about what the next hot stocks are on the stock market. So I think I do have something for you. So I think most of us would agree that AI is an industry that's poised to have some crazy breakouts in 2025 and beyond. So with that said, I suggest that you watch this video right here that explains what the best AI stocks are right now, or click on this video over here that AI thinks that you'll like instead. But before you click on either of them, please make sure to subscribe to the channel to unlock financial success one AI chat at a time. Thanks so much for your support.